Hey guys, this is Tyler here. I am going to talk to everyone about the stock market and whether it's better for you to hold stocks for long term or short term, and some things that you should take into consideration no matter which category that you fall in. Okay, so we've had a really epic market in the past year. We've seen incredible moves. We saw microcap stocks continuously last year moving 300 to 1,000+% in a single day. And we also saw large cap stocks like Uber, American Airlines, move like 30 to 40+% in one day, which is unprecedented for large cap stocks. You just don't see those kind of moves very frequently. There's obviously that huge market sell-off at the end of March, early April, and then the market started to rebound big time. And some stocks actually came back with a vengeance, even at much higher levels than they had been at previously. And unfortunately, because of how the market is and because many people simply don't have the expertise necessary, they were being very emotionally swept into the market, not necessarily knowing what was the right level to buy. There was a lot of unexpected situations. I mean, we saw Tesla, and Tesla looked like it was way overextended, even in early summer, and it just continued up. It ended up being one of the biggest large cap stocks of the year. It was like a 10-time mover or 1,000% mover last year. Just recently, this year, we saw GameStop had this unprecedented move from around $3 early last year to about $500. Ridiculous move. And this was a very unexpected stock. Obviously, it had this kind of smaller flow, small to medium flow, 50 million shares, more or less, and it moved like crazy. And one of the biggest reasons for this was the impact of social media, of Reddit, of other platforms out there, so that forums that people can talk about these stocks and ideals and exchange ideals with. And also because we saw apps like Robinhood that are now mainstream apps where all types of people now are buying stocks on these applications. People that just 10 years ago would have never thought about buying stocks before. On that same note, like GameStop obviously had this move just recently. Last week it got up to all-time high of around $500 a share, and it unfortunately, because there was a lot of buying restriction among other factors, I think many people thought it would pull kind of like a Tesla where it would just continue, the momentum would continue upwards, but it didn't. Unfortunately, it dropped down significantly. Yesterday, it hit its low in 2 or 3 weeks, got down to about $80 a share. And if you do the math there, that's like over 80 to 85% drop off from its high point last week. So you have to think about all these factors when you're buying and you're selling into the market, and also what you're comfortable with. There's a lot of factors here. First thing to ask is, when are you buying into the stock? Are you buying when it's at a very oversold, overbought point, or are you getting in? You have to look at when you're entering into the stock. You look at a stock like NAKD. NAKD Brent's had this massive move where just 4 months ago, you could buy this stock for about 5 cents a share. And recently it got up to like over $4 a share. That is a huge percentage mover in just a few months' time. This stock got hugely pumped, and you're talking thousands of percent of gain there. But unfortunately, most of the time you wouldn't have seen a stock even of this nature move that much. It was way oversold. Absolutely, the stock was at just all-time low levels. But you still have to keep in mind that I think once it hits a $0.50 or $1, this was, by this point, way oversold. And there had to be some kind of drop off there in price. And the fact that it just continued up, for people who held through when it continued moving $3+, this was big risk. And it's important to note, for every one time a stock did this, 20 times it wouldn't do this. And that's why you need hard rules. No matter what, you need hard rules. No matter what type of whether it's an investment, a swing trade, day trade, you need hard rules. And so simple rules, okay, I'm going to sell 10%, I'm going to sell 20%, at 30%. And when it reaches those levels, sell it. If you want to hold for like a 2 a 5-time return, then hold it. But when you get to that point, go ahead and sell it, because unfortunately, there's times where you may hold the stock and be anticipating like a 10 times return. You don't have hard rules in place. You're already like 5 times up, and then the stock ends up having some massive sell-off, or something happens with the stock and you end up losing like just enormously, and you almost go back down to zero. And this is unfortunately often what happens in the market. So you got to keep those rules in place. And I know some people, they don't like selling because they will mention like the whole tax situation. Well, remember, like if you're trading in a retirement brokerage account, typically your taxes, as long as you keep the funds in the account, you can either avoid or greatly reduce your tax burden, pending that you don't take out of that retirement account. So keep that in mind. If you do need an account for like your expenses, if this is totally your job, then have that account. But just note that if you're making a lot of money and you keep a lot more of the funds in the retirement account, or you operate like as a business, an LLC or C corporation, you can keep the funds in that account, and that in itself will greatly reduce. Or you can get like a trader status designation by the IRS if you're from the US, and that's also a way how the tax accounting is done in this situation in itself will greatly reduce tax. And also, I wouldn't let taxes be a huge factor. If you're very good at trading, whether it's swing trading, day trading, long-term investing, you'll be making such a great amount of return, of profit, that the taxes shouldn't be too much of a burden here. If you have a system in place and you follow that system, and you can weekly or monthly or consistent return, this shouldn't be something you worry too much about if you're following your hard rules, and it's just something to know. But there's obviously these different account designations you can get in that retirement setup. Okay, so that's something you should keep in mind though. If you are like a trader and you're not in a position where you can pay a lot of taxes, it may be advisable to hold stocks longer, but note that with the difference between small cap and large cap stocks, and that these small cap stocks sometimes have big moves over like a 6-month period, and then they can have huge sell-offs. So you may make massive gain and then lose a lot of that gain. Whereas like the larger S&P 500 stocks, often they make gains over years, and these are usually better stocks to hold long term in most cases. And also think that like microcap stocks, sometimes those companies go out of business. Anything can happen, so you want to note that. Now, okay, there's other people, and they're just psychologically, this is a big area within the stock market. People mentally are more or less comfortable holding stocks, sitting on stock positions, and I think some of this also goes back to your financial position. If you're in a kind of poor financial position, you don't feel comfortable holding a stock position, in that case, you would absolutely be better off just either day trading or swing trading if you weren't in a financial position where you could hold long term and it just made you very uncomfortable, made it hard for you to sleep and to go about day-to-day life without a lot of anxiety. Yeah, in that case, then buy, hold, and sell positions, or buy and sell, day trade. This would be a more advisable situation. Also note though that like with some stocks, they have very large spreads. So if you're trying day trade certain stocks, especially in the small cap category, you need to have a fairly good percentage gain before you can sell without taking a loss. So keep that in mind. Even with some large cap stocks, this can be a big issue. Now, another question, this we kind of went over, but are you doing this as a profession, as an investor? Is this passive income? Is this a secondary income? These are all questions that come into play. If you're a day trader by profession, you're probably going to need to tap into some of the profit for a living cost. And in this case, yeah, you're going to need to be continuously buying and selling, or at least having one account for that purpose. You can still day trade and swing trade and also long-term invest at the same time. One thing you could do is have two separate accounts, or you could have the same account, and you could have some stocks or stock for a long-term investment, and then have other stock or stocks for day trade or short-term trades. And that's where you're making your real like day or weekly profit where you use for expenditures, and then that long-term investment account, that account which also would have more tax benefits, you still keep that account there. You have a comfortable position that is for long-term purposes, and you maintain that balance, and you can have multiple accounts, 2 or 3 accounts for this situation. That's probably the best thing for someone who's unsure here. Keep percentage of long-term unrealized profits, keep one account there, and then keep another account just for your day or weekly activity or weekly trading, and that's the account that you could tap into and draw funds from. As I said before, one of the things to understand here is the tax position, because if you can have really massive long-term investment gains and you can day trade, and if you don't have very high or you have moderate expenditures, there's no reason that you should be using like a normal trading account and making a massive profit and then not having a business LLC account or a retirement account to help protect yourself from the large tax burdens, especially if you really don't need a lot of those profits that you're making. Other question is like, are you trading stocks like micro cap, large cap, forex, options, crypto? Huge questions here because these have very different parameters. Most people who are trading like option contracts, they're not going to be holding these for more than weeks or months. In most cases, typically people aren't going to be holding an options contract for 3 years. It doesn't happen. Whereas people may hold stocks for 10 years in some cases. It really depends. Also, like Forex it can be very risky and unpredictable. There's a lot of market factors that come into play, and most Forex traders are probably going to want to trade on a short-term basis, on a weekly or monthly basis. Whereas a guy who's has a balanced portfolio of large cap stocks will probably be maintaining some of these stock positions for many years. It really depends on the investor and trader at the end of the day. Another question you have to ask yourself is how much of your funds can be tied into the market or into particular stocks. If you have like a $100,000 fund and you are holding $50,000 or $80,000 in long-term investment stocks, it's going to leave you either $50,000 or $20,000 respectively for day or swing trading. Now, that does not factor in leverage, of course. You might also have leverage buying power, which I wouldn't factor in this situation, but you will want to note that if say you put all your funds into long-term stock investments, it will limit the amount of buying power you have for day trading or swing trade stock positions. Also, someone who's holding long-term stocks, like we saw in the market decline in early spring last year, if you're holding a certain stock position and there's a massive drop, especially if it's like in a retirement account, you may have an account that's valued at $100,000 and then it drops down to like $60,000 for a temporary amount of time, and maybe for months, a year or 2 years before it rebounds back. That's still going to limit your buying power for your normal day trading or swing trading activities. And also, for some reason, if you have to tap into those funds at any point and withdraw, that's going to be funds that you won't have. More funds you won't have for both the long-term investments or for the day in swing trading. So if you need like those funds for like a house down payment or for any personal expenditures, you need to kind of put that in perspective there. Okay, so going back here, another question. When it comes to day trading, if you're day trading, this is probably going to be more professional based, and you're going to have to look at this more from a profession angle. If you're working like a full-time job already, yeah, you could maybe day trade, especially if you have like any kind of office setup where you can get into your brokerage and log in. But if you're in a position where it's very hard to trade because you have like a full-time job, maybe not very advisable. You might be better off either like swing trading, holding long-term stock investments, because in most cases for successful day traders, they have to approach it like it's their profession, their full-time job. There's the psychological and the mental exhaustion that occurs when you're in this profession, and often it's very unrealistic to be doing like a full-time job along with day trading at the same time. Another factor too is your age and retirement and what your overall desires there are, because if you're like a guy, and you're pretty close or even like 5 years out from retirement, you get into day trading, say with a $200,000 account, intending to grow this to $500,000 within 5 years, you could be going the opposite direction. You could go down to 50,000 or even less in that time span, or much quicker, because of how day trading often is. Many times people who start day trading initially, there's actually a drop off before they start going up their accounts. This is very common. Many people, even who start like with a $20,000 or $50,000 account or $100,000, they might drop down big time, half or 2/3 of that account loss, and then go back up and then continue up, because it's an area. It takes a lot of skill, takes a lot of training, and being able to lose some is often part of this situation. So if you're like looking at this as a way to get yourself to retirement quicker, it may do the opposite. In that case, you might be better off sticking more to like a swing trading / long-term investment strategy. And also just the mental dexterity and just mental willpower of being a day trader is very strong. And it, just like in many professions, the younger you start, the better. Some guys, once they reach a certain age, they don't want to continue day trading. It's just too much stress, puts a lot of wear on their heart, on their emotional well-being, on just their sanity. And that's a very practical reason just to stick to swing trade or long-term investments. Another big factor, what is your account starting balance? If you're starting with a very small account balance, yeah, day trading will probably get you to a higher amount faster, but it won't necessarily happen, because you could also lose it. If you're trying to do like a swing / long-term investment strategy with a small account, it's going to take very long initially to get to a substantial amount in your account. Whereas if you have a pretty big account to start with, you could probably stick to more swing trading and still make very good yearly returns, even enough returns to live on if you're using these realized profits for living expenses. But the guy with the real small account, at least initially, yeah, they would probably be better off trying day trade to get to a minimum account, at which point they could start more long-term investment. It really depends on personal strategy at the end of the day. And these are just all factors you have to consider. Each person is different, and everyone has different needs, different capacities, and different ability. In any case, everyone can be successful in the market. It's just a matter of timing when you buy and when you sell the stock, whether it's day trading, swing trading, or long-term investment. So give me your feedback below, and thank you.